All right, let's talk about our monthly income statement and cash flow, and go back and remind you guys that what I worked on here was a little mowing business, right? Okay, and so I bought some limited equipment and a few supplies and advertising and a few things like that, and $1,200 in working capital. We got the opening day balance sheet, and we did our loan amortization. The next one we're going to work on is the monthly income statement, and of course, the first thing I want to do on that is go ahead and enable the editing, and then transfer that, if I can, to my mowing business, right? And I'll move it to the end. Okay, and if you don't move it to the end right away, you can always do it later. I think I'm going to rename it too, just because. Income statement. Okay, there we go. Now I'll hit save. Do that periodically. Then the next thing I might do is just get rid of all this stuff, and I don't need to get rid of the totals there, because it'll retotal, right? But get rid of some of these numbers in here and all of these in here. Okay, there we go. I'll leave these other ones because we'll get to those when we get down there and talk about them a little bit. So kind of left me with blanks up there instead of those little lines, but that's okay. So now what do I do? Well, the first thing that I'd do is I'd get started at the bottom. Okay, and part of that is we can, like we would maybe on our startup expenses, we can kind of back into these numbers up here, our sales numbers. And what do I mean by that? Well, just kind of watch, I guess, and hopefully we can figure it out. So yeah, okay, my computer Excel is going to pause for a bit. There we go. So now I got to figure some things out. And first thing I got to figure out is depreciation. Do I have any depreciation? Yeah, I am going to have depreciation because I've got $4,500 of machinery and equipment. Okay. Well, how much is that going to depreciate? Well, I'll tell you what I need to do. I need to go to the D2L homepage. If this thing will allow me to, we'll go to that D2L homepage. And when we get there, you'll see that I do have a link for the IRS depreciation schedule, or schedule for those of you from Canada. Okay, it's working on it. Hopefully it's going to get us there. Of course, it's not responding. That's just because it's too slow or something. So I'll try to make it bigger so everybody can see it. Okay, when I get to, I'll talk a little bit about the depreciation schedule. I'm waiting for it to come up, and what it's going to do is take us to an IRS site. I'm going to tell you that we're going to try to do the easy version, a straight line depreciation, it would be called. Okay, government likes to fiddle with depreciation. Oftentimes they'll fiddle with it as a way to encourage maybe investment, and if they did that, they would allow folks to accelerate depreciation. And in fact, you'll notice that a lot of the schedules, if you kind of go through this site that I'll take you to, a lot of them will talk about or they're called ACRS, or Accelerated Cost Recovery System, or a Modified Accelerated Cost Recovery System. Okay, and that's what the government sometimes fiddles with in order to promote people going out and buying equipment. Because if you can write things off faster, if you get a lot of income, you may then be inclined to pursue or try to get more deductions, and you would be able to do that then under an accelerated cost recovery system or an accelerated depreciation schedule. Okay, same name, or different name, I'm sorry, but same meaning. So okay, but if we use a straight line depreciation, then we're just going to kind of simplify it. I just want you to get the concept. Okay, and here's talks about it. So when you get here, you can just kind of start scrolling down, and you get down a little bit, and you get to here, and it comes under which property class applies under GDS, and that's really what I want you to take a look at. I'm not sure if GDS, if that just stands for General Depreciation Schedule, might. Okay. And I just want you to look at these things then and figure out where our property might fit. Okay. Now, 3-year property, tractor units for over-the-road use. That'd be the semi-tractors. Race horses, cool, huh? Any other horse, if it's over 12. Qualified rent-to-own property. 5-year property, automobile, taxis, buses, trucks, computers and peripheral office machinery, any property used in research and experimentation, breeding cattle, appliances, carpet, furniture, etc., used in residential rental real estate activity. Certain geothermal, solar, and wind energy property. You got office equipment, ag. Okay. You know what? My lawnmower and stuff just doesn't fit in here. I could probably argue that it's 5-year property, or I could accept this, that under number 3 here, it says 7-year property. Any property that does not have a class life and has not been designated by law as being in any other class, right? And so I could do mine on the 7-year, okay? One thing about it is the IRS is never going to get after you if you actually choose a period of time that's longer, right? Because that means that you'll have fewer deductions and you'll pay the IRS more, basically, up front anyhow, okay? And so, you know, if you've got some improvements, I'm sorry, I'm going to go down, some improvements, some other things like that, you might get down here into 15, 20, 25-year or longer property. Kind of depends on what you're doing. If you got some questions, you know, let me know. This is not something that we're going to get terribly uptight about. You know, if you get close, I'm probably going to be happy. And so, you know, I could do mine under either the 5 or 7-year. Okay, because it's $4,500, I'm going to choose the 5-year just because the math's easier, and I'll show you what I mean. Right, 5-year then is 60 months. Right, and my total equipment was $4,500. Well, let's do it this way. For 5 years, then I divide my $4,500 by 5, and I'm going to get $900 per year, right? So I'll just take this is equal to. Apologize again for this being rather slow. Equal to this divided by 5. Okay. So I'll get $900 per year. Then I can also say that this is equal to this divided by 12, and that's going to be $75 per month then that I would get for my depreciation. I could have taken a shortcut and said, nah, okay, 5, or you could do the math the opposite way. 5 years, 12 months a year is 60 months, so I could have taken $4,500 and divided it by 60 months, and I would have ended up with the same thing, right? So for depreciation, I'm going to put that in at $75. And I enter these as positive numbers, okay? And so I can just drag that along here, okay? Office expenses. Well, I got a lawn mowing business. I don't think I'm really going to have a lot of office expenses. Rent expenses. I don't think I'll have too many of those. It's possible. You know, I got April, May, June, July, August, September. You know, I could see maybe in the early months and in the ending months, I might have to go rent some equipment, you know, and part of my lawn mowing business. Maybe in March or April, I might help to till somebody's gardens, you know, and I don't have a rototiller, so I might just go rent one, right? And so I could do that, and I might then incur some expenses, and I'll just say I'm going to maybe do $250 a month. Okay. And in September, maybe I'm going to go till the garden back up again too, so it's ready, and so I'll have some more expenses in that case. Okay. Travel expenses, I'm going to be traveling around. I'm going to be putting on a few miles on my vehicle. Now, did I buy a vehicle? Was that part of my startup expenses? I didn't itemize mine, did I? I think if I remember right, I said I was going to have the old vehicle, right? Okay, I think that's what I said. I should have itemized my expenses so that I would remember. But I think I said I was going to buy an old vehicle. So I'm still going to have gas expense and those types of things, and I put that under my travel expenses. So I'll have gas and maintenance, and so it may occur at some oddball places. It's probably gonna, start out kind of slow and end kind of slow and be a little bit more busy here in the middle, right? So maybe it's going to be $100 here, and yes, I'm just making up numbers, so and maybe 125 here. And it's okay if you just make up numbers for this type of stuff. That's fine. 150 in May and June. 200. That's June and July are going to be my big months because they're busy. August, I might go back to about 150. And September, again, maybe back to just $100. Might have a little bit in October and stuff, but that's okay. Maintenance expenses, this is where I might have to get my oil changed, and I might have to maintain my lawn tractor and those types of things. And so my business is kind of seasonal. That's why you're seeing me hanging around here, because I'm doing a mowing business, so I'm just going to be busy right in here, right? The rest of you might, obviously you'd be all 12 months. Okay, and you saw if it's an expense that's going to stay the same, certainly you can just drag that, right? Copy it and paste it, and by doing that you just get this cross here. Grab it with a left click, drag it along, and release it, hit your enter, and you're done, right? Okay, now my maintenance expense on a few things, yeah, okay, that's going to be, maybe that's going to be pretty much, I'm going to have to do stuff regularly, so I'm just figuring it's going to be $50 a month. Changing the oil on my car 1 month, maybe working on and I'm just going to drag that over, okay? My advertising expense, I might start that here in February, right? I might start advertising a little bit in February, spend $100, and in March spend, that's when I really want to hit it. I might even spend $500 in March, okay? But again, mine's seasonal. April, I might go for another couple hundred. I hope I have all my accounts already lined up. May, June, July, August, September, not so much. Maybe yard cleanup and stuff, so I might advertise a little bit in September for that, another $200. Okay. In February, just to kind of let them know I'm coming, and a big one in March, and away we go. Okay. Did I say no office expenses? I'm gonna have to send out bills and stuff, aren't I? Yeah, I will. It's not gonna be big. I'll have stamps, a little bit of office expense here and there. I'll probably be using my home computer, so that won't be too big of a deal. Let's just say that's about $25 a month. And again, I'll just say that that's gonna go all the way through there. Okay. So now, can I think of any other expenses that I'll have for my business? Yeah, I got the travel. I'm going to have fuel, because I got to buy fuel for the lawnmower and whatnot. It's not going to be a bunch, but it's going to be some. Start in March, and it's going to be kind of small, and then it's going to, if gas prices stay down like this, it's going to grow though. And again, I'll probably hit my max here, 150 in June and July, and August might go back to 100, and then maybe 75 in September or so. Okay. Yeah. If I think of some other things later, I can come back and add them. So for now, I'm going to say that's okay. Now, my interest, right now I'm losing money, right, because I don't have any sales up here. So, but that's okay, and you'll understand that when I get to. Now, my interest, I've got to do something a little different. Now, I can tell you right now, and if I see this on yours, I'll know that it's wrong, right? Because interest expense should typically go down a little bit every month, right? When you look at my loan amortization schedule, My interest starts 27 bucks the first month, 26, 34, 25, 25, 24, 23. It keeps getting a little smaller, right? Because as you pay down a loan, you're paying down principal, and so the interest is being charged only on the remaining principal balance. So this should keep getting smaller, and so I'm gonna say, oops, I'm gonna do this different. Okay, I need to link each one of these, and this is a little bit painful because I haven't figured out a way that you can link a horizontal deal like this with a vertical deal from your loan amortization, and so we're just going to have to do this month by month. Okay, come here to my loan amortization, then my 27 bucks, hit my enter. I hit a minus sign because I want this to show up as a minus. Month 2, minus. Month 2. Hit my enter. Month 3, minus. I want to get far enough here that I can at least show you what I'm doing. Month 3, and then month 4, and you see it's rounding, and that's okay. Month 4, okay. Month 5, 1, 2, 3, 4, 5. Okay, month 6. Now, I like to link it like this. I know this is kind of painstaking. It might even be easier to just write it in. But the nice thing is once I get this entered, if I thought that I needed to go back and change my loan amount, maybe I decided I don't have enough equipment or something, I need to borrow some more, it's going to automatically change these. Okay, and so that becomes just a wonderful thing. Okay, now I've gone far enough that I can kind of show you what I mean by backing in a little bit. Now I'm gonna let's drop down one more time here first, because income tax expense, okay, if and only if you are a C corporation, and none of you should be C corporations for simple businesses like this. Probably the only reasonable business for a C corporation in our area would be a farm or a ranch, and I could spend you a semester, telling you about all the ins and outs about that. Okay, so if and only if you're a C corporation do you pay income. Does your company pay income tax? Okay. All other entities, LLCs, LPs, general partnerships, sole proprietorships, every other entity, even S corporations, the income tax obligation flows through to the individual or individuals. So unless you're a C Corp, call me or email me if you are, unless you're a C Corp, your taxes will be 0. And hopefully that'll go to work here. Okay, so you'd put a 0 in there, maybe. Golly gee. I'll put a 0 in this one then, maybe. Ah, wonderful. Okay. Then I'm going to drag it that way. And I'm going to drag it this way. Okay, get zeros all along there for my income tax. There we go. Okay, now, this is how much money I'm projecting that my expenses are going to be each and every month, right? I can come up here then and kind of plug in the number that I'm going to need for sales, right? And be able to, I'm going to need a total of at least like 5,700 to break even. And so, I may want to pick something even a little bit more than that, right? But unfortunately, in January and February, I'm probably going to have zilch because my business is pretty seasonal. March, I might have a little bit. I'm just going to say $500. April, hopefully it goes up some to $1,000. May, June, July, I ought to be getting busy, right? We'll say $1,500 in May. June and July are my 2 big months. I'm going to go whopping $2,000 for each of those. August, I'm going to do $1,500. In September, I'm going to, probably scale back a little bit, but I'll probably still do $1,000. And I might get a little bit in October, just some more cleanup or this or that. So I'll put that in. Okay. you do your expenses. In entrepreneurship, I would expect you to do a lot more research. Okay, for business finance, this is okay. So we've got this. We've got our sales, total of $10,000. I got total expenses of 50, yeah, whatever the heck it is, $5,350. My interest expense is still wrong because I haven't finished this, right? So I'm off here. I'm sorry. But if I finished my interest expense, it's going to be about $300. Okay, so actually my income would be about $5,000. Okay, I'm just trying to shortcut it a little bit so you don't have to sit and watch me plug all of those in. Okay, here's a question though. What happens then if I'm a retailer? So some of you might have chosen a coffee shop, or some of you I know are doing maybe some sewing or those types of things. I don't have a cost of goods sold, but you will. Okay, you will have a cost of goods sold because you're going to have some product, material, those types of things that go into it. If you're a retailer, if you're a coffee shop, you got to buy the coffee, donuts, and those types of things that you're going to sell. Okay, so you're going to have a cost of goods sold. So let me explain that. I'll use this column over here, maybe just as an example. If I were in a coffee shop and let's say in January I had $1,000 worth of sales, okay, sales returns would refer to people bringing stuff back and whatnot. I wouldn't expect a lot of that for my coffee shop. I might give some discounts. Maybe I'm going to do some couponing or something, and so maybe overall my discounts average 5% of my sales. If that's the case, I would actually enter this as a negative. I'd say minus 0.05 times my sales number. Yeah, something went wrong. Let's try that again. Minus 0.05. Ooh, I might have to enter that as an equals a negative. We'll give that a try. Equals a negative 0.05 times my sales. There we go. So I got $50. So my net sales end up being $950, right? But I've also got a cost of goods sold, and this is okay. Again, in a coffee shop, I would guess that their margins are pretty decent, that their margins are probably about 60%, okay? Meaning that their cost of goods sold are about 40% of their sales. Now, if I really wanted to get serious, if we were doing a more complex project, I'd break it down, because in a coffee shop, you're going to sell coffee, you're going to sell espressos, you might sell donuts or other baked goods, right? You're also going to sell things like mugs and t-shirts and all those other things, and your cost of goods sold might vary by category, and I'd probably break it down by category. But for our exercises, we can just estimate. And so if I said my cost of goods sold is about 40%, I could simply come here and say, okay, this is equal to 0.4 times my sales. There we go. And that gives me then what my gross profit is. Okay. And obviously, my sales, maybe they're going to change from January to February. That's fine. But because I've entered these in as percentage of sales, they'll change exactly in proportion to what I have up here. So, let's say I had my sales here in the second month of $1,200, right? But I can drag this over. I'd drag it all the way if I were doing it, okay? And same thing, I can drag this one over, okay? And so that just gives me a nice running total then of what my gross profit and those types of things would be. So if you're doing that type of a business, those are some other entries that you're going to need to make that don't need to make for my lawn mowing business. So, okay. So there we are. That's the basics of the income statement. Is just simply plugging in those things. We still have our cash flow yet to do, and let's take a look at that. Actually, also there are two cash flows that are available, and use whichever one you choose. Okay, it matters not to me. Okay, so you can either use this one, that's fine, or you can use this one. This one's probably the more traditional one that I've seen used. I think this is actually the one that came from SCORE, and the other one came from another service, and so I've probably used this one a little longer, maybe a little more familiar with it, but it really matters not at all. Okay, let's quickly go over what we'll do on this thing then, because it's going to match up our income statement pretty precisely. There are some exceptions. Please write these exceptions down, right, so that you'll know them as you go through them. And the first exception is depreciation. Depreciation we call a non-cash expense. And so it's going to show up on your income statement because it is an expense, but it's not going to show up on the cash flow because you don't write a check for it, right? The second exception is going to be the principal payment of your loan. Now remember that when you make out your loan payment, let's go take a look at that loan amortization again. Maybe, yeah, we will in a bit. But when you make out your loan payment, you make out a loan payment for $100. $25 goes to interest and $75 goes to principal, right? Your total cash is $100, and so we have to take all of that into consideration, right? Because we're going to be paying all that out. You might also have owner's withdrawal on your cash flow that would not be on your income statement. And so there's some things here that go on one statement or another. Remember I said you don't pay taxes, but you still pay yourself a little bit, and so that's owner's withdrawal that you would pull out. You still pay taxes on the whole amount of your profit or loss, regardless of what you actually take out as an owner's withdrawal. So that should be, I think, pretty much it, unless I come across something else. So first thing we're going to do then, of course, is move this or connect it up. First we're going to have to hit enable editing, and then we'll move this thing over and get her connected up. So if you've kept that in mind, then the things are pretty much the same. It should be pretty easy. We should be able to link most everything from our cash flow or from our income statement to our cash flow simply by, I'll show you. I'm going to close out that other one. Like I say, it's the same, and so you can feel free to use it if you want, but I'll show you on this one. Okay, so we can do it on our depreciation that doesn't go in there, right? But our sales do. So let's go take a look at the 12-month cash flow, and it says cash sales. Oh golly gee, I can hit my equal sign. I can come to my income statement. I'm going to hit January because that's where I started, even though it's a nothing. I'll hit enter. Hopefully that entered. Oh, something went wrong. I'm sorry. We're going to try it again. So equals income statement. There we go. Hit enter, and that's equal to 0. But if I stretch this out, it enters in my sales. Great. I got ahead of myself a little bit because first what I should do is tell you about this pre-startup estimate. Okay, the pre-startup estimate should be exactly like your startup expenses. Okay, and so all the stuff that's here in your startup expenses, and this is the summary, and the summary might be okay, needs to be in the pre-startup here. Okay, and you will finish so that this amount right here, this cash position end of the month, is equal to your working capital right here, this $1,200. Okay, so that's the one thing that you don't actually put on that cash flow because you let it calculate it. So let's start up here. First I got owners and other investment and bank loans. So let's go look on our cash flow and see. Okay, before I start, I don't have any cash on hand. I don't have any cash sales this first month, and I'm not going to collect any credit accounts, but my loan and other cash injections, right? So I'm borrowing money and I'm putting some money into it myself, and so that's equal to, from my startup expenses, my total sources of funds. Okay, done there. Great. What's next on my startup is my capital equipment. Let's see if I got a spot on here. Look at that, capital purchases. So I'm going to just come down here, click on that white box there, and I'm going to hit equals, come to my startup, and hit my capital equipment. Okay, next on my startup is my loan and admin expenses. So yeah, you know, that might be my accounting and legal. Again, I don't know if I itemized those things. Did I up here? Legal and accounting and prepaid insurance. So I might want to break these ones down, right? So I've got accounting and legal. So I'm going to come here and I'm going to go equals and back to my startup and hit my 1,000. Okay, but then I had insurance, right? Prepaid insurance is 600. So I'm going to put that in this slot here. Equals 600. Okay, so I'm cruising along. Next on my startup, I gotta scroll back down. I got that 1,600 is my advertising and promotional expenses, or advertising expense, right? Which is right here. A little bit different order, so you gotta kind of hunt and peck a little bit. Bingo. You know, that's going to take care of everything there except for my $1,200. Let's see what happens when I hit my enter deal there. Okay, so now I've got 7,650 that are my sources of funds. I've got my uses are 350, 1,600, and 4,500, and lo and behold, I have a cash position at the end of the month of $1,200. Yahoo, right? Because that's what I have for cash on my opening day balance sheet, or my startup for my working capital, right? Opening day balance sheet also. Okay, that matches my startup, so that's my starting point. I'm happy, right? Now I come through and I say cash sales, that's equal to my income statement. Next line down talks about credit collection from credit accounts. If we were selling, and I'm going to maybe ask that you don't do this, you know, let's do our all on a cash basis. We're going to sell it on a cash, or you know, we could sell it on a credit card, but we're still getting credited for it right away, right? As opposed to this is saying that you would allow people to charge and they might pay you in 30 days or 60 days. Okay, so let's leave that blank for all of us. Loan and other cash injection, we shouldn't need any more throughout the rest of the year, right? We shouldn't have to dig in our pocket and put any more money in. So then we come down to here, purchases. I don't have any cost of goods sold. I don't have to purchase any inventory, and that's what this is talking about specifically, is inventory. I'm going to have some expenses that are purchases, right? But I'm not purchasing any inventory for my business. Now, if you, on the other hand, are doing one of those other businesses that has a cost of goods sold, like we went over on the income statement, you know, I went through on those couple of columns. Here's what I'd kind of like you to do here for this project to keep it simple, is list those costs, list the purchases to be equal to, so I'll just even show you and say this is equal to, from my income statement, my cost of goods sold. Okay, bingo. Now that's a 0, but if my cost of goods sold here, remember what I have, $400 or something, okay, then that would carry over. Okay, and then I could just drag this along, right? Okay, zeros. I'm going to come back and just hit delete on that, so I get zeros all the way. Okay, because I don't have any purchases. Now you do have to be careful on these sales up here, and I showed you this. Okay, one thing that I also showed you on the income statement is that you might have some sales returns, or you might have some sales discounts. Okay, if you do, I used this number up here, but what you should use is this net sales number here then. In fact, I should have used that net sales number here for my cash flow too, because I might want to go back in and make some changes. So I'm going to change this to equals my net sales right here. Okay. Again, it's 0. The numbers aren't going to change for me, but at least I'll have the right reference. Okay. Gross wages, I'm not going to have any. You know, if you're paying some people, you're going to have to put that in. You'll have it in a salary and stuff on your other one, and it would be the same on here. Okay, outside services, I won't have any payroll expense. This would be the taxes and stuff that you have to pay. You know, payroll taxes, unemployment insurance, and workers' comp. Supplies, did I have any supplies? No, I didn't. You know, maybe my office expense, but I'll trade that. Outside, yeah, I'll figure that out. Maybe I'll have to come up and change this, because that does say office and operating. So I'm just going to change this and say it's office expense so that it matches up with my other one. I'm going to hit equals. come to my income statement. Sure, it doesn't start until then, but I'm just going to reference that one, and then I'm going to drag it. Okay, totals it up for me. That's nice. Repairs and maintenance, I know I have some of that, so I'm going to hit my equals there. Come back to my income statement. Where's my repairs or maintenance? It's right there. Hit my enter, and I can. Okay, advertising, I had this. This was the advertising I said I was going to spend up front before I open, but I also then said I'm going to have advertising on a regular basis, and that's right there. Okay, I forgot to hit my equal sign, so I'll come back here and hit my equal sign, come to my income statement, take this advertising and grab that. Oops, I didn't do that right. Let me see if I did it. Okay. Card delivery and travel, I know that I had some of the travel expense, so I can just hit equals. A little different title, but it's, you know, the same. I could change the titles if I wanted to. Well, I keep doing that. Keep grabbing that whole thing, and I don't mean to. This should just be equal. I should come to the first one and go enter, and then drag that out. Accounting and legal, I hope I don't need any accounting and legal as the time goes on. Advertising, I got fuel. I don't have fuel on here. I'm going to have to add that. I'm not going to have any. Well, I said I was going to have some rent, so I might have to just come down here and other, say fuel. And that's equal to my fuel right there. And again, I can drag that. Okay, what else did I have on my income statement? Office, I got rent. Okay, I forgot my rent, so I can't forget that rent here. It's equal to my rent from my income statement is right there. And let's just drag that bugger over there too. Okay, telephone, I didn't have. Utilities, nope. Interest, I got interest, don't I? Okay, and in this case, okay, this one's a little bit weird. Okay, so you be prepared here. Okay, be ready. So my interest on my income statement is entered down here, and so we've entered it as a negative number, right? But on my 12-month cash flow, all my expenses are being entered as a positive number, so I need this to be a positive number. And so what I'm going to do is hit, this is a minus, and if I subtract a negative, it will turn it into a positive, right? So I've got a minus, and then I can extend that out, and it'll make them all positives. Again, I didn't fix those there, so fuel, advertising, maintenance, I think I got. Travel, I think I got. Rent, I got. Office, and I didn't have depreciation, so I think I'm pretty good there. I think I've got everything, right? But I come down here and I've got loan principal payments. I've got my interest up here, and remember we had those loan principal payments. So like I had to do on the goofball income statement, now I have to come and look at this column that says principal, and I'm going to have to painstakingly go through, and for each one, it's not that bad, it's just a little time consuming. Principal payment number 2, you know, principal payment number 3, okay, etc. Okay, and I won't finish those for now. Then owner's withdrawal. Well, here's one thing, you know, if I finished my interest, what I said I was going to make, maybe $4,000 or $5,000. Oops, I didn't take this back out. I need to. Okay, I said I was going to make $4,000 or $5,000. I for sure don't want to take any more than that out of there. And probably what I'm going to do, since it's just a seasonal business, is I'm just going to take an owner's withdrawal. You know, maybe starting in April of $400 for those months through September. Okay, that'll leave some money in. Okay, it shows my cash position as negative. Oops, what do I got going on? I got to come up and check. So, because I shouldn't be negative, right? Well, the problem I have here is for some reason this total didn't total, and so I'm going to come up and hit my auto sum, and I want it to actually grab that even though there's nothing there, but there we go. Okay. If you do it, these two numbers should be the same. Okay, your cash at the end of December should equal your cash at the end of the year is basically what that's saying. So, and I've got some things you have to fix on there. I don't have my interest right. I don't have my principal correct, and so I know that I'm not right, but I should have showed you enough at least that you should be able to do that cash flow. So that should do it. Okay, I'm hoping that that gives you enough information to get pushing ahead on those. Feel free to bounce things to me anytime, right? You can email them or put them in the Dropbox. If you throw them in the Dropbox, let me know. Give me a little note so that I know to go check the Dropbox. I may not, you know, I generally go to the Dropbox once a week or so just to correct papers or correct the assignments and those types of things. So I might not see it if you don't notify me. So send me a little note and that'll send me there. So other than that, I'm going to sign off. So have a great day.